All 11 members of Nigeria's Monetary Policy Committee voted to leave the benchmark interest rate at 13.5%. Bismarck Rewane, CEO of Financial Derivatives, and Bayo, Omogoroye, Chief Dealer at GT Bank, joined me earlier to highlight their key takeaways from the meeting.
Well, I think the CBN governor has highlighted all the concerns, what they've seen in the market, and you've seen all the decline in interest rates, the increase in credit to the private sector, the decline in credit to the public sector. But if you take all that together, there are also structural deficiencies which they have also highlighted, which needs to be done. And if those are not done, the activity of the monetary policy can only be limited. The impact on growth and the impact on the economy can only be limited because the structural framework that transmits all of that, it's not adequate. And I think that's the concern that we have today. There have been concerns around the low FDI in the economy. You can tie that back to the structural deficiencies that exist. Why are state banks are buying fixed income securities? Why are corporates also buying fixed income securities and not really investing in equities, in companies? I think it all comes back to the fact that everyone is concerned around the deficiency of the structural capacity of the economy.
Okay, Bismarck?
I was pleased with the fact that the data of the central bank was very, very much aligned with the data from the World Bank and the IMF and the NBS. So for once, I saw a lot of data integrity. I saw the fact that he was passionate about monetary stability, even though he used the term macroeconomic stability. Monetary stability is appropriate. I think that there was a shortfall in my sense that the consequences of such a sharp drop in nominal rates and effective rates of lending and borrowing, right, and savings mobilization by about 300 to 400 basis points, that is, quite frankly, is about 33% of the range. And if you have that kind of sharp drop, there are unintended consequences which could play out in the external sector vulnerability. Are there adequate shock absorbers to take this without going to reverse the policy abruptly? Because if we see unintended consequences and we have an abrupt reversal of policy, that could be even further disruptive. So I have my fears about that, but I think that in terms of being on top of the game, I would say that the central bank is being much more proactive now in terms of managing monetary stability and monetary conditions.
So if I could just come in here, I mean, talking about whether or not there's, talking about the shocks, the central bank governor did mention that domestic economic reforms have provided adequate shock absorbers to withstand the headwinds going forward. I mean, of course, the external developments outside of on the global front and inflationary pressures.
I think that's a policy statement. But if I see that the external reserves have gone from $47 billion as I speak to 39, and it's going probably lower to 38, and I see that the terms of trade have gone negative, and I see that money supply saturation could feed into a marginal propensity to import, then I would rather, this was a prudent meeting, and I'm sure they have other things that they can use to shut the doors if necessary. But I'm saying that this swings, violent swings from rates of 12, 13% down to rates of 7 to 9% could have some unintended disruptive effects. And that's just a fear, but maybe the fears are unfounded.
But still on that, so Bayo, I mean, the CBN did say that there will be sustained, the initiatives of the CBN will continue, will be sustained, and that because it's seeing the effect, the impact on the real sector, so those initiatives are going to be sustained. And of course, we had a conversation earlier about, the support being given to the fiscal authorities by the monetary authorities. Some of the things that the fiscal authorities ought to be doing, being done by the by the CBN, the monetary authorities. The CBN governor talked about all the initiatives and all the monies that have gone to certain cash crops, certain crops that will be commodities, rather, agri-commodities that will be supported going forward. Just your thoughts around that, those initiatives, the impact we've seen so far, and just this role that the monetary authorities appear to be playing here.
Well, I think the CBN governor, like you said, he's listed all those things that they've done, and all that's and the impact that it's had. But I think for growth to really come, there's a value for having equity investments, or what I call investments in general. So if I go back to what Bismarck said before, separating debt from investment, what we have today is we throw a lot of debt at all these sectors, but debt can only go so far. You need to be able to bring in investment to grow for skill. If you look at how much debt is coming this year, it's about 1.1 trillion. What size of the economy? Like you said, it doesn't begin to dent the size of the economy. The scale of investment is coming. There has to be a savings. There has to be an investment drive to begin to grow all these sectors. And when someone invests in a business, you just take it on a very micro level. If I invest in a business, you look at it with a different eye. You particularly about how it generates return for you. You particularly about taking decisions that sustains that investment. So what we're seeing today is debt. The provider of debt doesn't have direct sight into the business. They trust the owners of the business to generate a return. But the owners of the business do not have investment in the business. How then do they sustain the business? That's just going on a very, very micro level. So the amount of debt has been thrown in either through the bank or through intervention by the central bank has what's provided all that we've seen so far. But a lot more is required. And for that more to be done, there has to be a lot more investment coming in. And that investment requires an enabling environment, which is where the fiscal needs to come in. That environment needs to be created so that when investment does come in, it supports what the monetary policy has done. Or if I would say that when investment comes in, it's then supported by monetary policy to further scale up the kind of benefit they create for the economy. And I think that's what we start looking at now.
Okay. Now, Bismarck, I mean, currency, the issue of currency, CBN governor did talk about we should expect stability going forward. But as you know, we are now down to somewhere around $39 billion, and all prices still around 60 levels. But obviously, it's all still subject to shocks. Just your thoughts on currency management and what we can expect going forward. Is it going to be the status quo?
No, I think the central bank put out on its website that reserves have to get to $30 billion before they blink. I don't think the central bank governor will never use the word devaluation. So before any adjustments of any sort. But that's not the point. I think the reality is that the overarching problem of Nigeria today is growth. Growth, significant leapfrogging of growth. It's not going to be, these are very useful palliatives, but they're not going to do the structural thing. So, yes, I agree, central bank is doing this. But if you look at the GDP numbers for Q3, one of the sectors that grew most negatively and slower than anything is financial services. So with all that we are saying, even in Q3, the financial services industry actually grew negatively, right? And therefore, why is this happening? It's happening because there's been a lot more of changes and turbulence. So the guys who are investing in financial services, the banks and others, are having to respond to changes. Maybe they've got to the plateau now, and then we now begin to get to a point where we're going to see some benefits. So, but there's a lot of work in progress, but one must give it to the monetary policy authorities that they've made some significant moves in terms of the PSBs, which they need to do more to allow the telcos in. They need to do more, the cashless policies, the initiatives, the development finance initiatives. I think when you put all of that together, it's probably laying the foundation, but there are probably better days ahead. But the currency is still the point that we we have to scratch our heads a little bit.
That was Bismarck Rewane, CEO of Financial Derivatives, and Bayo Omogoroye, Chief Dealer at GT Bank.